Hey everyone, my name's Andy. My channel's Finding Value. If you like making lots of money, this channel's for you. Click subscribe, give me the thumbs up, leave comments below if you guys have any questions or want to make any statements. I like reading through those. Now, this clip. It's this is I call this missed opportunities, and I've messed up quite a bit in the past, and I was a young investor. I didn't know any better. So I'm not beating myself up too much, but I'm going to show you at least a couple companies that were in my portfolio. I had purchased some good amounts of them, and I sold them far too early. And the problem that I had is I didn't know the value. I didn't know market conditions. Well, I didn't really know anything because this was back mid 2000s, and I didn't really know as much about some of these companies. I knew about them. I had great purchases on them in terms of buy points, but I didn't have the power to hold. And I think the reason I didn't have the power to hold is that once you get up like 100% or 200%, you're likely to sell it. And I didn't realize how big of opportunities these investments could be. And I didn't understand as well back then market conditions and value. So I'm gonna go in here. I'm gonna talk about the missed opportunities. Some of the missed. There's way more than this, but some of the missed opportunities that I had in my investing experience. So I call this lots of missed opportunities. As a young investor, not knowing exactly what I was doing, I knew a little bit, but I was not dialed in. I was not refined as an investor, and this is really what I didn't know. I didn't know market conditions and how everything tied to each other. I didn't know value. I didn't know potential returns. I didn't know when to sell. I didn't know how to rotate, but that money was rotating between sector and sector. And the one thing I did do right is I picked the right companies and I purchased at the right time. I did do that right, but I didn't know all that other stuff above. I mean, I knew the companies were good. I just didn't know. I didn't know what they could potentially return. So here are some of the companies that I messed up on. I'll show you my buy points. Here is Intuitive Surgical. They make the Da Vinci system. I think it's like an extension to perform surgeries of the surgeon. So it's a robot. And I thought there was a lot of good potential in this company based off of some of the early kind of testing they did. So I was like, well, I'll put some money into it. I think it was like $35 a share. And I think it was like $3,500 in it, something like that. So it was 100 shares. Is that right? Yeah, it was like 100 shares. So yeah. Yeah, it's about 100 shares, $35. That's what I can remember. But look at the performance here. Absolute domination. And another thing to look at is that company, and some of the other companies did this too. I think all of them almost did. Look at how it went up and then it came back down and re-hit that level at 2009. And remember, I didn't know technical analysis as well when I first started investing as well. So knowing what I know now, I would have just doubled down or tripled down in 2009 on that area that came back. I would have invested a lot more than what I had done originally, and I would have held on knowing the market conditions. And I'm going to show you what those market conditions look like and what I'm looking for. But this one was definitely one that was a missed opportunity. That would have been $70-something thousand. Chipotle, I owned a lot in Chipotle. I remember my cost basis. It was $54, and I had like a lot of money in it, like 20 grand. And this thing would have been a lot of money. It's at 1,442. And this was the E. coli scare in here, this little portion. But holding through all of that would have been a much better proposition. I would have made a lot of money holding onto this company. And notice how this came up and then came back. This would have been a great buying opportunity. This was at the end of the commodity bull market. So some of these companies did exceptionally well even at the end or during a commodity bull market. But man, they did incredibly well. So that was a missed opportunity. And another one was Baidu. I owned Baidu. I bought it for $100 a share. And this is split adjusted down to 10. And it's now 283. So that one would have been a very good one to hold on to as well. Even holding on to it through this down move. And you know what? Probably would have been better just to hold on to it even now, just to continue to hold on to it and actually never sell. So you young guys out there, if you've got a good company, perhaps just buy it and never sell, because it would have been better off than what I've done. Now, here's looking at the Dow to gold ratio. This Dow to gold ratio was declining during that time period, but those companies would have been good picks. And then you can see they were really good picks when the Dow to gold was outperforming. But now we broke this uptrend line here, and we're moving on down. And now in this area, we were throwing the valuations for commodities. So I think buying commodities right now is definitely the spot to be. And I'll go over a couple more slides. But the Dow to gold ratio, I think gold's going to outperform here at some point. And commodities typically do, they typically outperform during that market conditions. Here is the dollar. This is the last bull market in commodities that went absolutely berserk. We went sideways. This would have been the time in this recovery phase of real estate down here. Would have been the time to buy a bunch of stocks. We went up, and now we're breaking down, and we've got the dollar declining. And we've got this big resistance line right here. It's going to be resistance, at least moving to the downside, support line for dollar. If we break through this, I think it's going to be extremely game on. And I don't see a scenario where it doesn't break, because I think what's going to happen is that the dollar is going to take it on the chin in terms of value, because they're going to have to hold interest rates down. So they're going to sacrifice the dollar. They're going to print the heck out of the dollar to hold interest rates down, to make the interest rates affordable for the government. They're not going to default. So I think they're going to have to sacrifice the dollar over time, which is going to be absolute fuel to the fire. If they hold interest rates down and sacrifice the dollar, you're going to see large negative real rates. And this could be a once in a lifetime opportunity in commodities, because commodities are at 100-year low valuations. And if they try to do what they are going to try to do, which is hold interest rates down and sacrifice the value of the dollar, which means you're going to have inflation while holding interest rates low, you're going to have just absolute fire for real negative rates and commodities going higher. And this is another dollar to Swiss franc chart, just to show you early 2000s. This was the buy signal that was thrown on commodities. We were entering an expansion phase of real estate during this time frame right in here. We had a value of the dollar decline all through here. And then this is when it ended. It was 08 ended in here, and then 2011 for precious metals. Then it started moving in an uptrend, and now we broke this uptrend line to the downside. I think this is signaling, and even if this moves around a little bit, even if it comes back up, I still think it's in an overall downtrend, which is signaling a commodities bull market. We've got the buy signals flashing on valuations for commodities. So I think the setup is all there. It's all there with the dollar. It's all there with the dollar performing against other currencies. The Dow to gold ratio, it's all there. It's all there. So missed opportunities. I think I ballparked those just the three companies at a $600,000 mistake. I've probably missed out on many millions of dollars making mistakes as a young investor. That's why I started this channel. If you don't want to repeat those mistakes, subscribe to the channel. It forced me to look into why and to become the investor that I am today. And remember, we didn't have YouTube. We didn't have any of this stuff when I was investing in my early years. I probably would have learned it a lot quicker, knowing, at least taking some cues from some people and then tying it all together myself. I could have easily tied this together much quicker. We have a commodities bull market ahead of us, at least that's of my opinion. I am not trading in and out and not making the same mistakes as I did with some of these other companies. I'm going to be cost averaging into good companies continually. When I see opportunities out there, I'm just going to continue to pile in to undervalued, well-established, I should say, companies that have a good risk reward. And I'm going to spread out amongst the best reward companies that I can find. So this is, as new investors, I did same mistakes. I even chased prices after the commodity bull market was over because I didn't understand the market conditions yet. So I did have some losses after the commodity bull market because the returns were so big, they went up so fast, and it was so enticing to chase it. I didn't know any better. I was a young investor. And then in the mid early 2010s, 2012, 2013, that's when I really started refining myself as an investor and learning how to make a lot more money. And at some point I was just like, man, I can't wait for this next commodity bull market to come because I'm going to absolutely kill it with the knowledge that I've obtained between, I'd say, 2011 to about 2014, somewhere in that range. And I was just waiting. And I was like, I'm gonna kill this commodities bull market. And then I created the channel on YouTube so I could help everyone else kill it with me. And I'm like kill returns. That's what I mean. I'm not talking about other stuff. So if you guys want to join this channel, this community, and ride it up with us this next commodities bull market, click subscribe. Give me a thumbs up for this content. Leave comments below on anything that you guys want to comment. What are some of the mistakes that you guys are making right now? What are some things that you think you could improve on? Leave it in the comment section. Thank you for listening. This is Finding Value.